Hello everyone, thank you so much for joining today. My name is Olu. I'm a Nigerian living in Moncton, New Brunswick, and on this channel I tell you what it means to be an immigrant living in Canada. If you are new here, thank you so much for clicking on this video. Please don't forget to subscribe and join the family. And if you are a returning subscriber, thank you so much for always coming back. Today's video we're going to be talking about credits call, all you need to know about credits in Canada. In Canada, the finance system is heavily based on credit. An average person, has a credit card or, has some form of credit. And so you need to learn, or we need to learn about this thing that is influencing our finances. So what is a credit score? A credit score is a measure of how reliable you are with your borrowing or with any form of credit. It shows how well you manage your credit, and it gives a lender an idea of how risky it will be if they are going to lend you some money. In Canada, the number ranges from 300 to 900, 900 being the best, 300 being the worst. To be in a very good place, it's been advised that you want to keep your credit score between 725 and above. That is when you have like a good, very good credit score. Credit bureau are private companies that collect, share, and store data about how you use your credit. In Canada, there are two main credit bureau companies, and these companies are private companies. But one is TransUnion, the second one is Equifax. You can actually order your credit report from them periodically. However, you'll need to pay a fee. There are some other free websites that give you like free your credit report. However, it may not be accurate. It's just gonna give you an idea. It may not be as accurate as what you get if you order your credit report from Equifax or TransUnion. Also, some banks, they give you a report of how you use your credit, give you an idea. Any form of borrowing makes up your credit. So if you have like a mortgage, a car loan, credit cards, student loans, any form of borrowing, they contribute, they make up your credit. Other than that, there are some utilities that make up your credit as well. So sometimes your telephone bill could be recorded or reported in your credit profile. All those bills that you pay periodically, some of them could be reported. Your credit score or credit report is really important. If you want to borrow money, lenders look into your credit report to know your history, how well you've been able to manage your finances, and that will give them an idea of what interest rates they should give you. And other than lenders or financial institutions, there are some other private entities that they require your credit report, or they look into your credit report. Sometimes your landlord, so if you're looking for accommodation, sometimes your landlord might say, I need your credit report or your credit history. Some organizations as well, they request for credit report or credit history. Sometimes when you need to get promotions in your organization, they may want to look into your credit report and credit history. And as such, it is important that we take a good care of our credit report or credit history. However, everybody that is checking it, they will tell you, they will take permission from you before they check your credit report. And so let's talk about the factors that make up your credit score. According to Equifax, I'll show you the breakdown of what makes up your credit score. So the first one is payment history, which is 35%. So 35% of your credit score is made up by your payment history. And your payment history means how well you've been paying, have you been paying on your due date, how many of the payments did you make. So let's say you borrow something and it's been divided into like 10 payments. How many of those 10 payments did you make on time? So that is what your payment history looks like. If you have like a late payment or you're not paying your credit regularly, that is, you're contributing to 35% of your score. The next one is utilization. Utilization takes 30% of your credit score. And what do we mean by utilization? How well are you using your credit, or how much of your credit are you using? So let's say you have a credit card of $10,000. They want to see how well you're using that credit card. Are you using the whole of 10,000? Are you using some portion of it? The lower your utilization is, the better your credit score will be. What do we mean by that? So let's say you have a credit card of $10,000. Rule of thumb says your utilization should be 30% of your credit limit. So typically you shouldn't be using more than 3,000 of that $10,000 credit limit to be in a good place. Sometimes you might want to use more than 30% of utilization. Maybe you have like a major spending that you need to make. However, it is advisable you pay it off, or you pay some portion to keep the utilization to 30% when your statement is generated. So I know it can be complicated, but we always want to keep your utilization to 30%. So whatever credit limits that you have, always keep your utilization to 30%. If you are using more than that, quickly make the payments back and bring your utilization level to 30%. Another factor that contributes to your credit is your credit history, which is 15% of your score. So 15% credit history means how long you've had the credits. They will look at every credit that is being reported. Just look at your history generally. For new immigrants or newcomers to Canada, this may be low because you don't have an history in Canada yet. Another factor that affects your credit is public records. Whatever is being recorded for you, whatever is being started for you as a credit, and that is 10% of your credit score. So public record is 10%. The last one is inquiries, which is 10%. What do I mean by inquiry? So when you apply for a credit, they will want to check your history or your credit score before they approve your application. And so whatever inquiries that you make, it is affecting your credit score. It is dropping your credit score. And so you want to limit the number of application, and we advise people, you want to limit the number of applications that you have, or how frequent you are checking your credit score, or you're making inquiries on your credit score. Now let's talk about the best practices for your credit, or how to have like the best score, how to influence your credit score. The first thing is you want to check your credit report periodically. Number one, to know what you've been spending on, what has been reported, the inquiries that have been made, and number two, for identity theft. Identity theft is a big thing here. Sometimes you might have a credit card open in your name and it's spent and you don't even know about it. So it is advisable that periodically you get like a credit report either from Equifax or TransUnion, or maybe even from the free website, just to have an idea of what is going on with your credit profile, credit score, credit report, or maybe even from your bank. You may request for your credit report periodically. The second best practice is to have a credit card. Yes, some people don't believe in this, but it is advisable to have a credit card. However, that shouldn't influence how much you spend. That shouldn't make you spend more. When you have a credit card, it is being reported on your profile, and when you make regular payments on your credit card, it helps you build your score, especially for new immigrants, because we don't have like a credit report here. So the best way to build your credit is have a credit card and make your payment regularly and on time. Sometimes not everybody in Canada is qualified to have a credit card. However, I'll say ask your financial institution, speak with your financial advisor. There's something we call a secured credit card. And what does that mean? Is like you're getting a credit card, the bank is issuing you that credit card. However, you have a collateral. Maybe you're putting some money in your savings account, to be like a guide for the credit card that they've given out to you. That is an option that you can explore. That way you're using the credit card to build your own credit history here. So yes, number two point is get a credit card. However, that shouldn't make you spend more. The third point that I want to make is make your credit payment on time and in full. you always want to pay your credit before the due date or when it is being stipulated, and you want to pay in full. When you pay in full, you're sure you're not paying interest on any credit or late payment fees. Late payment fees is very huge. So let's say your credit you're supposed to pay on the 20th of every month and you missed that. There's a penalty for it, which is late payment fee, and that is huge. And for any late payment, it is going to be recorded on your credit report, and I think it stays on your credit report for like 6 years, and it reduces your score. So you don't want to be late on payment. If you have any financial difficulty or something is happening and you feel that, okay, this is the due date, I'm not going to make payment on the due date, be proactive enough to call your financial institution or the credit provider and ask if they are able to move your due date. Sometimes they do that for you. They're able to move your due date. That way you're not late on your payment. However, you always want to make your credit payment in full and on time. Another point I want to make is credit utilization. For your credit card, you want to keep your spending to 30% of the limits that you have. What do I mean? So let's say your limit is $5,000 on your credit card. You want to ensure that you're not spending all the $5,000 before your statement due date. You want to keep your spending to 30%. And if you need to spend, maybe you have like a large purchase coming up, you can spend that much. However, make payment on the card right away before your statement is being printed to reduce your utilization to 30% and lower. When I came to Canada, the first card that I got was the limit was $500, and I knew that limit was not enough for me, but because I was new to Canada, that was the only thing that the financial institution was able to offer me at that time. My husband has to get another credit card. That way we were able to split our purchases on both card and not max out our limits on the card. Another thing you can do, if you know that the limits that you have, you'll definitely spend more than or utilize more than 30% of the limit, is you diversify your borrowing. What does that mean? So you have different things or different channels that you can use when we talk about borrowing. So for example, maybe you have like different credit cards and just use 30% of on the limits on the credit card, or maybe you have a credit card and you have like a line of credit. You want to diversify, spread your borrowing. That's basically the meaning. Spread your borrowing so that one card is not maxed out. You can have 2-3 cards and keep them at that limit. However, you want to spend what you can afford to avoid paying interest. I talked about that earlier. The last point I want to make is reduce your credit application. Definitely you still make credit applications. Maybe you're applying for your first credit card, or you want to get a mortgage, or you want to buy a brand new car. You still apply for credit. However, you want to limit the number of credit applications that you have, because with each application there's a check on your credit profile, there's a check on your credit score, which is inquiries, and that drops your score. And so you want to limit how many times your credit is being checked or is being profiled. We always wait for pre-approvals. So for example, if you've been able to build your relationship with your bank for some time, they might probably offer you a pre-approval. Pre-approval is based on maybe the relationship that you have with the bank. They've been able to study your finances and they feel that yes, you have the capacity to have this limit in your credit. So any pre-approval being offered, you can take it. And proactively, you can even, anytime you go to your branch or your bank, your financial institution, you can ask them if there's any pre-approval on your profile. That way you can take it rather than you applying for a credit. I remember when I wanted to buy my car, I went to the dealer shop, and while we were still test driving the car and all of that, they already checked my profile, and that already got like a dip on my car, on my credit profile. So even if you want to buy something, you want to proactively tell them that I've not decided. They should not check anything yet. You're still looking around. So those are basically the points that I want to make. Thank you so much for watching. If you find this video valuable, please click on the like button. The more likes we get, the more people get to see this video and enjoy the value. Until we see you next time, thank you. Stay safe. Bye.